Hey there, good morning, everybody. Welcome to Thursday's Throwdown with Adam. I know Adam wants to do an explainer video on the front end of this thing, and then we will go into questions. We got a whole bunch, but one thing that I think I need to do to tee this thing off is we got a note this morning, and it does have a question, so I'll raise the question later on. But this is from Mitch with the best land clearing company in Salisbury, North Carolina. And so it says, hey, when all this calms down, I'm hearing a groundswell of support for a new CNBC show, Adam and Gary, anything but typical, a 30-minute daily show to answer all of your accounting questions while drinking clean juice. I got my elderberry shot right here. Thanks, juice. From a lounge chair by the pool with dogs barking in the background. And we might even hear some carpet installation pounding in the background too, right?
That is true. That's why I'm wearing their headphones.
All right. And I do have to say this. We got interviewed by the Wall Street Journal yesterday. So supposedly it's going to make it into the weekend edition. So we'll see. Hopefully they don't misquote us. Every time I've opened my mouth for an interview, it's always been misquoted. So hopefully the Wall Street Journal will do a better job.
Yeah, and also, Mitch, I will not be drinking clean juice because I'm wearing this shirt today. Since I didn't get to have St. Patrick's Day.
Well, I'll drink to that. You want to take it, buddy?
What's that? Yeah.
You want to take it?
Yeah, so in the last webinar, and I've had a few of these calls this week about, hey, I finally got my funding. How am I going to get to the FT count? I got to get people back on payroll, but geez, they're not going to come because they're making more on unemployment right now. So I did a little bit of digging on that. And again, not an employment law attorney, but in North Carolina, the North Carolina benefit phases out at $420 a week. So I think one of the last questions that was asked was something around hearing something about 420. That applies only to the North Carolina benefit. So even if they make more than the North Carolina phase out, they should still get the federal $600 additional through through July 31st. So when you're talking about bringing people back, I couldn't find anything in North Carolina specifically related to COVID-19 in their resource center, but in my limited Google search, I did find an employment lawyer in Ohio that had written something. And I don't know if this is possible or not because I've never actually logged on to the North Carolina unemployment system. But in theory, during this, when someone's doing their weekly certification process, they don't actually have to certify that they don't actually have to be looking for work. But if they were offered a job, I think they're supposed to say yes to that. In which case, then they would have to give an indication on why they turned it down. And, in this case, they would, assume that they would say, due to safety or something like that. So I think where you would get into kind of a dicey situation would be, hey, I need to bring the person back on payroll, and I'm actually not going to ask you to do anything. And then they still decide that they're going to turn down the offer. Chances are they probably are just going to certify. They're probably not going to be straight up with North Carolina Employment Security Commission. They're probably just going to say, no, I don't have an offer to work. So having never logged into the North Carolina unemployment system, if we lived in Ohio, we could log into the unemployment system and say that that person is ineligible to receive benefits. And then from there, I'm assuming what would happen is you'd have to go through an appeals process. So all that said, I guess where I was going with that is that, I think if you're trying to get people back, you need to plan on, you're going to have to make it more beneficial. You're going to have to make it more beneficial to them than the $48,000, I think, somehow, because you're in a time game at this point where, okay, you make them ineligible. They have the right to appeal that, I believe. So then you're going to have to go through the appeals process, however long that's going to take. And you're talking about 8 weeks. So while I think it actually probably is possible that you could say, you can make somebody not be eligible. I'm not sure that would immediately stop their benefit claim until it's adjudicated. So I just, I just would be hesitant on that as my strategy, is all, until we've got some more information. So with that, let's fire it away, Gary.
Rock and roll. All right, I'll just do a reminder to everybody. There's a Q&A button down there. Folks have already found it, and some have been trying to use the chat as well. We'll monitor both of those things, but I'm going to start with things that came in last night and this morning. So this is from Mike. Question on PPP loan forgiveness. Saw on Tuesday's webinar your suggestion to keep payroll up to date, match cash and accrual, and move to weekly payrolls during the 8-week forgiveness period. Problem with us is that we received our PPP loan on April 10, set up a separate bank account for this purpose. Then we ran payroll on April 15, which covered the time period from March 25th through April 7th. We pulled amounts from this payroll that were below $100,000 per person directly from our PPP bank account. What do you suggest we do now? Switch to weekly, or should we run an extra payroll on June 5th, the last day of our forgiveness period, for the remaining funds allowed? Thanks, Mike.
So there's really two questions in there. The first question is around the separate account. If you receive funding from a different bank than you usually use for your main operating account and payroll accounts, if you have a separate payroll account, I can understand the concept of having a separate bank account and then moving money in. But for us, we're all doing everything out of the same account. Everything's commingled, because I'm assuming that what I'm going to have to be able to produce is a record from our payroll provider that indicates what I paid during the 56-day period, and the associated amounts with some sort of reduction for anybody that made over $100,000 on an annualized basis, just based on looking at what I paid them. So if you think about that in BGW world, we're in the same boat. We pay on the 15th and the 31st. So we've got the first payroll that happens is had some time from before, and there's going to be some time at the end that would potentially be accrued. So since I guess I'm just really, at this point, we're not going to change anything about how we do payroll at BGW right now. I'm just very leery of having to prove an accrual, because that just seems ripe for abuse, questions, underwriting, can't get comfortable with it. So I really just, because otherwise, why couldn't I do that? Why couldn't I have done that in my PPP application? Hey, I accrued, that guy technically earned, this much more in 2019 because he had an accrued bonus that I didn't pay until January. I mean, you think about, how did the application process go? The application process went on a cash basis. So I think we have to assume for right now that this is going to be cash basis accounting on the other side, which is why I've said, look, if you're looking like you're going to be tight, you may want to do an additional payroll run just to prove it, barring further guidance. Now, would I change anything today? Absolutely not. I would not change anything about what I'm doing until probably the first or second week in May, because that's going to give you enough time to kind of modify, whatever you needed to do on the payroll side, hopefully pending any guidance. So if you think about it, the first forgiveness requests are going to start coming down, probably second week in June. And, there's going to be, hundreds of thousands of them that happen. And the bank only has a 60-day window to grant the forgiveness. So I can't imagine that they're going to want this process to be super complicated, which kind of goes back to, cash basis accounting, I think, is going to win the day. And it's going to look very much like the application process. So I wouldn't change anything that you did. at this point, and I wouldn't change anything now. I would just be prepared that come sometime in May, you may have to start thinking about how you're going to change things.
All right, great. Next question from Brenda is, would paying rent to employees who are using their space at home for an office be acceptable use of the PPP funds and be able to be used as a portion of the 25% of Forgivable?
So in theory, yes. I think where you're going to get hung up on that one is that all the literature, all the language read that something had to be, it needed to be for leases that were in place prior to February 15th. So the challenge that you're going to get is, okay, well, where, if someone asked for it, where's the lease document, and show me that it was in force prior to February 15th. So, you could kind of do a rush job, I guess, to try to backdate something, but I would probably try to get there via a different mechanism. So for example, in this particular case, if you're trying to do that to get the 25%, even though there would be taxes on it, a way to get to the same answer is just boost up somebody's wage to be equal to the amount that you're talking about, which means that you would have a higher payroll number, but that's actually okay as long as they didn't exceed 100 grand.
Awesome. Next question is from Jay, and he said, hey, I know I asked this question before, but still want to know if this is exactly how it is. So does a company have to spend 75% of PPP money on payroll or bring current employees up to 75% of their pay rate by June 30? I think it is both, correct?
All the above. And again,
so,
keep in mind that even though the language reads June 30th, it's really going to be when your clock expires.
So
because the way the law was written, it said that PPP funds will be available through June 30th. But the reality is that, this next batch that gets passed today probably will be gone in a week from everything that we're hearing. So if not sooner, maybe they'll pass a third round. But just by default, everybody's expiration period will be prior to June 30th, I think.
That's a great point, because I heard back from a large regional bank today saying that they do not think that all the stuff that they have 40,000 loans still to be processed in PPP. And he doesn't think that this next round will be able to cover all the stuff that they have. We will deal with that later on.
Yeah, I heard this morning from a regional bank that, they believe that they're going to be able to make it through all of the applications that had been submitted, I think, by the 8th of April. So, I mean, that's, week and a half ago. So there's still just a ton of demand that's out there.
So basically, Jay's he had a number of additional questions that I think we've answered already, but he says, I hope it's just 75% of PPP needs to be spent on payroll, and that is our understanding.
Well, yeah, it's 75%. You still have the FTE counts. You still have to restore people's salaries up to $75,000. And I think what I've said before, I'll still stick by. There's a chance that they may try to idiot-proof this and say, look, if you spent 75% of it, that's just good enough. But that's not how it's reading now.
Yeah, and this kind of dovetails into the next thing. And Rick, thank you for sending a nice note this morning. And it's a fairly lengthy thing, so I won't read the whole thing. But basically, he's on the board of a nonprofit with a very large bank that has gone silent and has not, so far to what we know, funded anything. And his concern was, hey, we haven't been able to get any answers out of these guys. They've gone completely dark. Would somebody be willing to talk to us? I said, sure, have them be on this call. And so I reached out to a number of my regional and community bankers early this morning to just find out, hey, where are you guys at? Because what I've heard, and a lot of these folks have been extremely responsive, whether it be First Bank, whether it be Pinnacle Bank, PNC, Aquesta, Town Bank, New Dominion. They've all been very responsive, as well as United Community Bank. United Community Bank is the only one, as well as Aquesta, as of this morning, that said, yeah, we would still take on new customers. We feel like we've gotten everybody through, or we're getting everybody through the first round. And there are a lot of great banks out there, and there are a lot of those that are the larger ones that have really been faltering under the weight of this stuff. So what I'd say is, if you have a need and you say, gosh, I can't keep betting on this roulette wheel for the big bank, can you connect us? I think the key is be with a nimble bank and a banker that is aware of it, that can also shepherd this thing through. That's how I think they've been running circles around the big one. So ping me, GFREY@trustbgw.com. I'll try to help connect you. So hopefully we answered your question there, Rick. Anything else, Adam?
Yeah, the couple things that I'd add on that, Gary, is that, also plan that if you're going to do this, you probably need to do it today, and you probably need to plan on, that's also going to mean you're switching banks to be with them, because they're not going to, I think they're going to require that you're going to move your depository relationship over as part of the whole deal. The second thing that I'd say, going back to, the banker, someone's shepherding you through, it appeared that, whether it was large banks or small banks didn't really matter, because we had some large banks that actually did this, PNC in particular. You really had two options. Option A was, my person is going to babysit this process through. That is where we've seen the most success. And again, PNC is probably the largest bank that we saw that took that approach. The other approach was, we developed a centralized unit, and it's out of my hands. I don't know anything more than you do. Which, when we've had some people that have complained about people going radio silent, I think the general theme has been, it's because those banks, and I guess I could sympathize with, I'm so frustrated that I can't give you an answer, that I'm going to ignore your text. I could argue all day long that maybe that's not the right approach from a relationship standpoint, but I could understand that, someone having that reaction given all this. But if the bank had a centralized process, that's where we're seeing most of the breakdowns occur, in terms of the banker that you deal with not knowing what the status is.
Great points. Thank you. Next one is from Denise. Good morning. Our PPP funds were deposited on Monday, 4/20. Congratulations. Our company's payroll is Monday to Sunday. Do we use the PPP funds for check dated 4/22, first check date since funding, or check date 4/29, payroll of 4/20 through 4/26, which is the first full payroll week?
Willie Nelson would be proud on the date that you got funded. I love Willie Nelson, by the way. I go back to what I said previously. I wouldn't really change anything at this point, in the absence of guidance, because I really do believe it's going to be cash basis accounting, which would imply that this first payroll is going to count. And I'm not particularly concerned about commingling of funds, because I think all that's going to happen is it's going to be just like the application process, which is basically produce your expense report and supporting evidence.
Next question from Mitch. I know that the monthly payments on our SBA loan, both term and rev, were abated beginning in April for a 6-month period. Cash payment scheduled to begin again on October 1 per our lender. Is the SBA going to actually make those payments on my behalf, or are the payments just deferred until the end of the loan?
So congratulations, you just got free money. So with if you had an existing SBA 7A loan, it was supposed to be automatic that the bank abated your payment, and the SBA is supposed to be paying principal and interest on your behalf. So it's out. You don't have to pay anything on it, and it's not going to come back at the end of the loan. So the only thing you want to be careful of, when I say careful, a lot of banks before the law was passed went ahead and granted an abatement period. So it could be that you've got the bank abatement, which really isn't an abatement, that's going to be tacked on your loan. And then you've got the SBA abatement, which really is, that's just free money, courtesy of all of us.
All right, one follow-on question from Mitch is, if SBA is actually making the P&I payment, are there any tax consequences for these payments?
It's currently, it's other than bankruptcy, that was the only place where it talked about taxation. It said you wouldn't be taxed on it. It's silent on taxation. So in theory, it should be taxable income to you, but everything else is talked about this being non-taxable events to everybody. So I would assume at this point that it's not going to be a taxable event. There's always a chance that it could. I talked to, I had a call this morning where we talked about what's kind of the worst that could happen. So I'll give you my opinion on the worst that could happen. And this could be associated with both the SBA 6 months, but then also PPP, because there has been noise around, hey, we want to make sure that people, didn't abuse the system and demonstrate, and really were harmed and really needed the money. So in my opinion, the worst that could happen would be one of a couple different things. Just thinking through, how would I implement this if I was the government? One would be that as part of the process of forgiveness, I have to prove harm. That has a lot of challenges with it, in the sense that, if you just look at BGW, we're probably going to land April down about 50%, which is due to a combination of factors relative to what we would have been in a prior April. It may be the same, maybe up, so maybe the same, down 50%, maybe up a little bit. Who really knows? But what nobody can predict is, well, what's the downstream effect in terms of permanent damage? So it'd be hard to really say, well, no, I wasn't harmed in the 8-week period because, the shit hit the fan. Everybody knows that I swear a lot, so it's the first one that I've had on the webinar. In the fourth quarter. So I really don't feel like there's going to be, other than the certification of you really needed the money and things were uncertain, I don't see a whole lot happen on the forgiveness front. So then it comes to, well, what am I going to put on my tax return then? I could see, as a worst case scenario, they put on the tax form, how much did you receive? And how much was your income down relative to 2019? And so if I got 500 grand, if my income was down 500 grand relative to 2019, I could see them saying, fine, it's tax free. But if it was only down 300 grand, I could see them maybe trying to put 200 grand of that be taxable, or revert back to, you don't get a deduction for things you didn't pay for. But, the latter, you don't get a deduction for things you didn't pay for, that's the opposite of, this is supposed to be tax free. Because if you give me money that's tax free, but then don't allow me the deduction for what I paid for, it's not tax free. So the only way that I could see them really implementing something on the harm side would be an income comparison. But even then, that's fraught. That's got so many logical problems, because maybe I had a one-time event in 2019, or otherwise, you're going to be counting on us for some really aggressive tax planning to make sure it looks bad. So I just, I don't really see them doing a whole lot in terms of the diligence on harm.
Awesome. Thanks. This is from Marge regarding condo rentals. We have 2 condos that are given out for income in Florida. We rely on the rentals to pay the mortgages. The $5,000 quarterly COA fees, electric taxes, etc., the governor declared no short-term rentals. The income and expenses are filed with our personal return. We use a rental management company, so we have no employees. Is there a program we qualify for to help us meet the expenses that would normally be covered by the rentals?
I mean, I think the only thing that you could, because you're not going to, the only thing that you could possibly do at this point would be to pay yourselves a management fee backdated to 2019, which would mean that you've got to, somehow, create a 1099 and then do a pro forma Schedule C for that management fee. So then you could apply as a self-employed individual, because the rental income is not going to show up on anybody's radar as self-employed income. That'd be one route, but you're really up against the wall in terms of timing. The other route would be the EIDL loan, but you're not going to get the grant piece because you don't have any employees. So it would just be the loan itself, which, update on that. We did have first person that I've heard of actually got the loan, $500,000, 30 years. So congratulations, Steve. First that I'd heard of. So it actually is real. I stand corrected.
Awesome. Next question. Can you run through how forgiveness will be calculated based on February 15-ish payroll? Will they be looking at FTEs or payroll dollars when comparing the 8-week period? Both, right?
Yeah, it's both. And again, it's your FTE, your average FTE count in your 8-week period relative to 3 tests. First off, what you originally reported. Second is, if you don't like that math, you can use February 15th through June 30th, 2019. And if you don't like that math, you can use January through February 2020.
Yeah, FTE count and 75% against payroll. And
Yep.
You can't go below 75% of what they're making, and it's capped at 100,000.
Right.
And that's from a non-CPA. Maria Satterfield. Hey, I think it's awesome you guys are doing this, everything else going on. I have 2 questions. I need to fire an employee, but plan to seek a replacement. How does that affect time frame to spend PPP money?
It really shouldn't, because your FTE count is going to be right. So as long as you actually spend the payroll dollars associated with the person that left, I wouldn't see you having a problem. I mean, again, there's nothing out there right now that says it has to be the same bodies on the payroll.
Next question is, what counts as utilities? I'm thinking about costs of running a business, postage, printer rental, internet, office supplies, et cetera. Are things like this included, or does it strictly mean power, water, et cetera?
So internet, telecom, those were actually spelled out. The self-employment guidance that came out got a little bit more loose in the definition. When it came to, they didn't use the term utilities, but it was really around what could be included in the 25%, and they used the auto as an example. But again, that was to self-employed individuals. So I really would be, I think the term office supplies, it's probably the one that I would have the biggest hang up on. So I just would really try to get there through, traditional rents, traditional utilities, and then see where I got to, and then try to go dig a little bit more.
All right. Next question is from Nazrin. We received our PPP loan from BB&T. Funds were deposited on 4/21. We received congratulations notification from BB&T today, 4/23. We're trying to maximize loan forgiveness and non-payroll costs that are, as they're not minimal. From what you understand, do we have to both incur and pay amounts eligible for forgiveness within the specific 8-week period, April 21 through June 16? And what are your thoughts on this? And if so, then it seems that prepaying rent and prepaying salary is not allowed. The expense wouldn't be incurred within the 8-week period.
Accrual versus cash-based accounting. We're gonna assume cash. Based accounting, meaning it doesn't matter when the expense was incurred. It's going to matter when you paid it.
To a certain extent, I can prepay salary to certain individuals, but we'll hit the 100,000 ceiling pretty quickly. I have room in the loan for paying extra rent, but I'm worried that will not be deemed forgivable. Just looking for best strategy.
Absent further guidance, I don't think there's going to be an issue with taking people up to $100,000 in equivalent pay. And I don't think there's going to be issues with adding related parties onto the payroll. That may violate the spirit of the law, but those would be the levers that I would be pulling.
Okay, then we just got a spam, somebody trying to sell us rental property. So you, but no. All right, we're going to go ahead and go to the chat here. Found out too late that we could pay, and this is from Jennifer, found out too late that we can pay, that we can add guaranteed payments in the payroll calculation during the application process. Can we include guaranteed payments in the forgiveness calculation?
Yeah, absolutely. I mean, I would be consistent. And remember, even if it's not characterized as guaranteed payments, it's really self-employment earnings. So if you look at what BGW did, and we advise all of our clients to do as a tax strategy, is that, sorry to get into tax geek world, but if it's on box 1 of the K-1, it's ordinary income because it's considered at risk, meaning, hey, it's not guaranteed, it is at risk. So the only guaranteed payments that live in BGW world, even though I get a set draw, is my health insurance. But I do have self-employment earnings because all of that money that I made that was at risk on box 1 is also, I believe, in box 14. And hopefully that's right, but it's where there's self-employment earnings tagged. That's really your number. So only point in saying that is, I don't know if you're a client or not, but I would be using my guaranteed payment amount in the forgiveness amount. But from a tax reporting standpoint, just make sure you're reporting it on box 1 and then reporting it as self-employment earnings, because that's truly what the test is for the forgiveness, for the intent of the forgiveness, plus maximizing the tax benefit of the new tax law change.
All right, this one's from Tom. I have spoken to a few others receiving PPP who say they are being advised they should be mixing PPP funds into their regular business banking accounts. The implication is that it'll make it harder for the federal government to track how you use it. Seems like a slippery slope. I agree with that. What is your professional advice on how to track and report the use of these funds?
So covered this a couple times, but I'll address specifically the federal government. Remember, it's the bank that's going to be certifying your forgiveness. It's not the federal government. So, and all they're supposed to do is just make same thing in the application process, make a best faith effort. So I just don't see why, I would ever have to demonstrate that I only use the funds from one account, when really, what am I going to have to show them? I'm going to have to show them payroll records. Show them where the cash left a bank account. And I'm, for rent, I'm, probably going to need to show them some bills or a lease agreement. So I'm not particularly hung up on the commingling of the funds argument. I don't see that as a huge risk. I know we have a lot of clients that are doing that. It just seems like it overcomplicates things. So instead, what I would be doing is I'd be going through my general ledger and identifying the accounts that I'm going to need to pull and keep track of to be monitoring for my forgiveness, so that it's easy for me to pull the GL expenses. And then, if you think about, hey, if I were auditing myself, then I could have my three-way match. There's the expense on my file from account number, 5253, which is, wages, payroll expense, tied to my payroll report that I just pulled from my payroll company. tied to, and there's where the cash left the account. Because even like if you think about payroll in particular, again, I know I'm getting into the weeds on this, but just think about what you'd have to prove with this. So our payroll number that comes out of our bank account includes the employer portion of payroll taxes that aren't included in the calculation. It does not include Gary's 401k deferral. So it's impossible to actually match what came out of my bank account back to the payroll report because they don't agree. Other than, I guess, if the payroll report included a cash requirements piece, but that's still not going to align with the forgiveness calculation. So I think it's, again, I don't really believe this is going to be super complicated because it's impossible for it to be super complicated.
I agree with that. It's going to be a mess just dealing with it after the fact, the way it is.
Yeah.
This is from Janet, and this is just a comment on the earliest discussion in the front end of this thing. She said you can dispute unemployment in the system after they get it in North Carolina. So for whatever that's worth. This is Sheree. My sister works for the Y. They sent her to start paying her for working, but if she doesn't accept that, they state she will not be eligible for unemployment. I assume this is so they can get to the FTE counts, even though they're still closed. As you may know, the Y is still drawing fees from subscribers. Any thoughts?
Yeah, no, that's all. Yeah, that's exactly right. I mean, just because the Y, that's no different than anybody else that was paying somebody below the amount that they could receive for unemployment benefits. So they are just trying to deploy the funds, get to the FTE count. All that said, remember, it's the same problem. It's the person that has to certify on the website that they couldn't work or couldn't, do whatever. And if they don't, and even if they certify accurately, they still can say, but I turned down the job for a myriad of reasons. And then you start getting into a pissing contest. That's why I feel like, given the 8-week window, I don't understand how you could make it work. Just logistically, it just doesn't seem possible to make it work, which is why I just feel like, maybe try that for a week or two, see what happens, and then just assume you're going to have to pay the person more than they're going to make on unemployment.
This is good news from a salon. They got PPP and EIDL money.
Cool.
She said, don't tell anybody, by name anybody. So we won't mention the name of the salon. But Randy Johnson, do you have any direction on S Corps for PPP? I'm being told by my bank that SBA is only considering salaries reported on IRS 940 and not flow through income dividend / dividend to the owners 1040. Any comments?
That is all true. The only thing you could possibly do in that case would be if you haven't filed your 2019 return, or even if you did, amend your W-2s and W-3 to reflect more wage. I mean, that's the only thing that you can do at this point. If you've had low wage, high S distributions, that's really all you got at this point.
All right, this is the next question. How would you define transportation costs as called out as being part of additional costs that PPP loans can cover and be forgiven?
Yeah, remember that the transportation costs were very specific to the self-employed individual. So if it's self-employed individual, I think it, probably literally is that, what is required to operate your car. It's the interest on the loan payment, or if you were deducting mileage, it would have been your mileage. Probably would not use depreciation expense because it's a non-cash expense, but maybe you could. And then, fuel, insurance, stuff like that, like what's actually required to operate the car. All that said, the same thing in theory would apply to a more traditional business, but I just want to remind everybody that the car example was only in the self-employed, which literally is someone who is a sole proprietor filing on a Schedule C guidance. It was not in any of the guidance associated with a more traditional business that was in the first round of guidance, other than, the interest expense associated with vehicles and the imputed interest expense associated with equipment leases. Capitalized leases, in theory, would qualify because it was really anything that was backed by real or personal, secured by real or personal property.
Hopefully that answers your question there, G. Brown. Next question. What's the likelihood that forgiveness rules get changed or modified?
Well, there aren't any other than what the original law is. So you got to assume that more guidance is going to come out. They just updated the FAQ on the Treasury's website with an additional one, which basically gets back to the whole, does somebody have to be harmed or not? And the guidance was, nope, it's all just a certification process. Like, I believe I will be, or I'm concerned about it. So that's where it will happen, though, would be on the Treasury's website.
All right, this is from Chris. During the PPP loan covered period, there are a number of hours worked by hourly employees. Are these a factor in the loan forgiveness?
To the extent that you use them to calculate FTEs on the front side, you would use the hours to calculate FTEs on the back side.
Yeah, they used an example of crews were averaging 45 hours per week before the crisis, but dropped to 35 hours per week during the crisis. Would this create an issue?
I would have used as the minimum requirement the ACA requirement, which I think is 30 hours. I would have called as an FT. That's off the top of my head. Whatever the ACA requirement is, I would use that as my minimum requirement.
All right, this is Dave from our favorite clean juice provider. Thank you. Just to be clear, timeline for the coverage period is 8 weeks or 56 days, and those 56 days are calendar days, correct?
Yeah, it's days, not business days.
No, this is awesome. He wants us to give us his our home addresses. He wants to send us t-shirts. I think your beard t-shirt just tipped him over.
Well, it's actually funny. At the Davidson location, it's actually right next to, why am I drawing a blank? Casey Ashlock, you're going to freaking kill me on the name of your new place. It's right next to a package shop. I haven't checked with Casey to see if he's open or not, doing deliveries out the front door, but clean juice and beer. I could win all the way around.
All right.
If that doesn't work out, then mine, which is a women's boutique, is right at the end of the corner, and I know they have a hidden stash of hot drop and roll in their cooler, so maybe that's a possibility.
It's good to have friends.
Right.
So, Sheree,
I also heard a rumor that the brick house was secretly serving out the side door. So.
Oh my goodness. All right. B of A requested additional docs considering slowing down uploading to get FTE average and wait for us to open. Is there a chance that I would lose my potential PPP?
So, I can't speak specifically to Bank of America, but, generally, if you've made it through underwriting, that's the first good hurdle, meaning you've submitted everything that you needed to submit. And they've said, you have been, your facts check out. That's a good first hurdle. Good second hurdle is we've submitted you to the SBA and you have an E-Tran number. Then the final stage is you got a loan document that you signed. So that's what I'd be looking at this point, is that if you were required to submit those documentation, I wouldn't necessarily be concerned that you went to the back of the line, because it probably means that you weren't necessarily in the line in the first place. Because I'm guessing that what they probably did is they got them through, like your queue was based on completed application that's been through underwriting, because that's what, if you look at the Treasury Department guidance, lenders had to say that you were eligible for the amount requested, which means it had to have been through some type of underwriting process before they could even contact the SBA to reserve your funds. So if you're through underwriting, you're probably good. Don't know when you had to submit the documentation. Hopefully it was, hopefully you've already done it at this point, or I would do it today if you haven't.
All right, this is from Twinette, and I'm assuming this has to do with unemployment, but it says during the weekly certification, they're supposed to indicate if they received funds and how much. What should they put if they are receiving the $600 federal?
Oh, you don't put anything at that point because it's not, it doesn't count. Like that's supposed to be like wage.
Okay. Hey, Nathan, hope you're doing well. Can we use signing bonuses to get employees and have the signing bonus forgivable?
Yeah. So you, again, right now there's, absent any further guidance, as long as you're not over 83.33 per month, it doesn't appear like there's any factor in how you get there.
This is from Anonymous. We received funding under CARES Act grant for our 6% of Medicare fee for service revenue. Are there any rules surrounding what will be forgiven? Are we required to submit anything?
I can't speak to the Medicare piece, but on the regular CARES Act, it's just the usual wage information.
All right, this is from Benjamin. If you get 100,000 for an entity and 75K is used for payroll, can you divide that money up amongst the employees as we want, or do we have to give each a certain amount of money dictated by the government?
Well, they can't, you have to pay people as you would have normally paid people, subject to you can't have reduced them to less than 75% of what they made before April 27th. So in that scenario, it doesn't matter if you pay people a little bit more, and as long as you didn't reduce them to below 75% of what they made prior to April 27th, you should be fine. And even on the reduction piece, as long as you've restored them by the end of the forgiveness period, you should be fine. The only thing that I'm kind of concerned about on that one, though, is that how do you prove that you've restored them? I mean, the only way that I could prove that would be I actually have like a salary letter, but even then that's fraught with problems. So I really think you probably would need to plan on demonstrating that you actually had at least one payroll run that showed that on an annualized basis they had been restored.
Cool. Next one's from Brian. For a two-part question, but here they are. Any guidance around how we're going to report getting current furloughed employees back to 75% or more of prior wages? A lot of examples have been discussed on this new CNBC duo of doing this action right before 6:30 or end of date by your 56-day count. Concerns are, if it's cash-based review, then we won't need to show payroll during the 56-day period to confirm wages have been restored, do we?
Yeah, so, I mean, what I would be planning on doing right now, again, I wouldn't do anything pending further guidance. So kind of beginning to middle of May, and I'm starting to think about getting my FT count right and my wages right. I know I've said the stroke of midnight, but in practical terms, you're going to need to prove it. And the likely way you're going to need to prove it is I'm going to have to produce something from my payroll company that demonstrates that I actually paid somebody. So how do you get there at the stroke of midnight? I've had a few conversations with some of our clients that, hey, a way to get there would be, we have an all-day company meeting and we run a payroll for that all-day company meeting would be an example of how you would get there.
His second question ties actually into one that I've got teed up from Robert, so I'll hit both of them. Is there any language that gives us more confidence that we're allowed to reduce these wages right again after 6:30 or end of the 56-day period?
No, I mean, there's nothing that says that you cannot do it, nor is there anything that says that you can. So that's, you're based on the fact that since it is silent, it's possible until they say until someone speaks up about it.
So kind of dovetailing onto this theme, at least from Robert, is regarding calculation.
Well, can I go back on that though?
Yeah, sure.
Yeah, but so think about it from this perspective though, is that you've got this 3-phase opening thing. So if you're in that window of, phase 1 or phase 2, there's not, yeah, thanks, Jack. I saw that comment. There's no, there is some pounding in the background. If you're in that phase 1, phase 2 window, and you've got to deploy the money, but yet you're at the end of your forgiveness period and you're still in phase 1 or phase 2, God forbid in your state, you still can't freaking open. What the hell else are you supposed to do besides reduce wages and lay people off? There's nothing that you can do.
So this is from Robert. Regarding calculation for FTEs, we hear 2 different stories. First is a head count on 6:30, or first is it's the head count on 6:30, and the second is it's the average over the payout period. Any thoughts which it is?
Well, again, we're operating under the assumption that it is average head count during the forgiveness period, which is 8 weeks. Not 6:30. 6:30, I think, is confusing everybody because that's when funds were going to be available. But the reality is there's not going to be funds available to get anybody through 6:30 being the forget. Well, I guess technically that could happen because if anybody that's in this round, they get approved 10 days later, they get funding. I guess technically that could go to 6:30, but we're operating under the assumption that the average test is over the 56-day period from the point you got funded to the point that the clock expires. And if you don't meet the average, then you just got to have the bodies on payroll to pass the exception.
All right, next one's from Joe Guy. Hey, replenished PPP coming from Congress, PPP round 2. So far, is it the belief that the rules, stipulations, et cetera, for the new funding just follow the same established for PPP round 1?
Yeah, I'm embarrassed to say I didn't read it, but Blaine did, and Blaine's super smart, and he said there weren't any material changes. So we're taking Blaine's word for it on this one, and I trust him. So based on our guru, which in this case was not me because I didn't read it, there wasn't any change in it.
It is certainly a team effort, just as we can hear from the carpet being installed in the background.
Yeah.
Joanne, how are part-time employees calculated as part of the full-time equivalent? For example, if there are 3 employees that each work an average of less than 30 hours, how are they aggregated toward my FTE count?
Well, so what I would do in that case is I would be consistent in the calculation with whatever you've reported in your FTE count in the first place. So if you put them together to equal full-time equivalents, then I would put them together to equal full-time equivalents. If on the other hand, I counted them as 3 full-time equivalents just because there were 3 people on payroll, then I would do it that way. So I think the only time that, yeah, so I would just be consistent in how you calculated it between the initial reporting period and then what you're doing when you apply for forgiveness.
This is from David. As a seasonal recreation establishment, are we to pay our seasonal staff with PPP?
Yeah, because part of the whole calculus was, hey, there are seasonal businesses that are being impacted.
Next one is there any material negative or consequence for pulling application from one bank and applying with a smaller bank?
No, it's just timing. So if if you're with a large bank and you've gotten like positive confirmation that you've been submitted through underwriting, you've got an E-Tran number, I'd stick with it. If you're not feeling any of that, then I'd look at switch, but your switch is today at the banks that Gary referenced earlier.
Yeah, and again, from what I've heard, Thomas McTeer over at United Community Bank confirmed that they are still taking new customers. They got, I think, one little over $1 billion through, and Aquesta is doing it on a limited basis as well. But you need to ping me, and I'll connect you directly, because if you just go straight into a portal, you'll probably, even with a smaller bank, I think you need to have somebody shepherding this thing through. Next question is, how would you define transportation costs as being part of the additional cost PPP loans can cover and be forgivable? We talked about that, but you want to just hit it one more time?
Yeah, again, remember, transportation costs were only included in the self-employment portion of the guidance. So there's no guarantee that transportation costs are included with the company calculation. But if they are, it's going to be interest on vehicle expense, mileage, if that's the way you went, gas, maintenance, that kind of stuff, if it is going to be included. But, I wouldn't necessarily count on it unless you were a sole proprietor.
This is from Nathan, a well-respected attorney in town, and he said, you are correct that unemployment appeals process would take too long to be relevant for the PPP process. So thanks for chiming in on that one.
Thank you. And Nathan, if it's Nathan, I think it is. Appreciate you. Thank you.
Yeah. We won't say who, but it's Holland Chandler.
Yeah, got it.
Thanks, Nathan. We appreciate you. Babette, if I receive the funds 420 and payroll on 424, where's the rest of that question? And paid payroll on 424. I think she's just trying to know, like, where do I?
Yeah, so it's still the same question: accrual versus cash basis. I wouldn't change anything for right
now. Anonymous, do you have any direction for S Corp for the PPPs? Being told by my bank that SBA is only considering salaries reported on IRS 940 and not flow through income to the owner 1040.
Yeah, same thing applies from before. You'd have to amend your W-2 for 2019 to reflect more wage.
This is from Phil regarding leases. Is that equipment and real estate leases or just real estate leases?
The way that the law reads is that it's any rental expense, which a lease is really a rental expense. Any rental expense, and then on the interest side, like on a lease, there's an implied interest amount in the lease rate. And the way that the law reads is that it's any mortgage backed by real or personal property. So personal property, that's positive for leases. The fact that they use the word mortgage, I think, confused everybody, because nobody thinks in the commercial lending world of a mortgage other than associated with real property. And they never brought it up again other than in the self-employment language. Like, they never brought up the term personal property outside of the original law. So we're going now that, hey man, if it's backed by a tangible piece of property that you would have paid property taxes on, even if it's like a line of credit that's secured by the assets of the business, we're going to count that interest expense pending further guidance. So in that case, really what would possibly not count would be anything that's not secured.
This is just a vote of affirmation from William. He said that they just got funded by a regional bank. They submitted their stuff on the first Saturday. So it would have been the 4th, I guess, if that sounds right. That PPP was passed and they just got funded this morning. That's good. Any guidance on leases for fleet? Do you think these costs will be covered under additional costs?
So again, we got, two components to that. The lease, which is the auto expense itself, would be included if you're self-employed. It's not clear if that's going to be included if you're a business outside of the imputed interest rate associated with the lease.
All right, this is a time check. We're at noon and we still have 30 questions to rock and roll through. So we're going to continue on. Anybody that has to drop off, we will post this afternoon on the BGW CPA YouTube channel. We've had a few hundred people that watched Tuesdays already as of last night. So we're going to just keep rocking and rolling here. Miriam, I have an LLC as a sole proprietor or sole practitioner of an occupational therapy. I pay myself as I need to, but without designating rent or payroll. How will that work?
So you being a sole proprietor, if you file on a Schedule C, you just have to produce your Schedule C and you can claim up to $100,000 if you made $100,000.
This is from Stephanie. Can you explain when you stated you have to restore people's salary up to $75,000? It's actually 75% of their salary. Sorry.
Well, I use $75,000 just as a number, saying that if the max is $100,000, then you have to get people back to $75,000. So the example that we've used in the past is that if you took somebody that was highly compensated, let's say they made $250,000 a year, and you said, and they were commission based, and you said, look, dude, you're going to have to be on like a base draw until we sort this all out. And you took them down to say $50,000. That person would need to be, in my interpretation, restored to at least $75,000 to meet the test, because they were reduced, but $100,000 was the cutoff. So that extra $150,000 they made doesn't matter for this purpose. What does matter is anything that they were reduced below 100, which in this case, they were reduced $50,000 below 100. My take would be I probably would have to bring that person up to at least $75,000. That's why we keep on using that as the example.
Okay, this is from Melissa. Concerning the max 25% reduction requirement, we have employees who earn base salaries and commissions. Do we need to add both together to determine whether they received 25% pay reduction? Most received 25% base pay cuts due to COVID. Their commissions will likely drop more than 25% during the 8-week period.
That's going to be a doozy to check out. So sorry, Gary, I'm running 10% battery, so I'm gonna have to plug in and you guys are gonna have to hear some pounding.
Okay, that's fine.
All right. So we may get cut off simply because the iPad may die. So with that, on the reduction amount, remember that it's going to be calculated based on the pre everything going bad time frame. So February 15th to April 27th. So that's really going to be what you're going to want to look at, Melissa. And if there were significant commissions that were paid in that window, I probably would plan on the fact that somehow I'm going to have to do one payroll run that demonstrates that that person was restored back to 75% of what they made in the February 15th through April 27th window, if I had to. So, maybe there'll be some different guidance around that for base versus commission. But again, I'm going back through, this is going to have to be idiot proof. And trying to explain to somebody, well, this was their base versus this was their commission. They only went back to blah, blah, the base. I just think everything that I've seen in having to deal with the application process, that is going to be a problem. So I would plan on probably having to do, deploy the funds like you're going to deploy the funds to maximize forgiveness amount, which would include paying commissions because that was part of the calculation on how you got the funds in the first place. But in terms of the forgiveness, I probably would plan on the fact I'm going to have at least one payroll run that demonstrates that the person was back to what they were making before, which before is February 15th through April 27th.
This is for Marina. Do I need to pull any FFCRA payroll payments out of my accounts?
If you had a credit against that, you would. So if you want to email me offline, Marina, about what you're thinking about, I can answer that one more directly because I've talked with Rick and Gerhard briefly, but I just would want to know more about what you guys' current status is.
Okay, cool. Next question. Once funding is received, how would you suggest booking the entry? Funds are received as a loan, but then will be transferred to a grant. We're anticipating meeting all the requirements to make the funding grant a grant as opposed to a loan.
Yeah, so we've had a couple questions about that, and obviously GAP hasn't produced any guidance, so the FASB hasn't produced any guidance. So what I've suggested people to do is to book the original receipt as a loan, and then keep running the expenses like you would normally run the expenses, but then do a journal entry as a contra account on the income statement. So basically, I would be crediting my income statement and debiting the loan. So it's going to make your income statement look like you made a lot of money, but technically that money is not supposed to be taxable for that amount. But I would just make it really easy, and the only real easy way to do that would be to have a contra expense account.
This is from Denise. Does fuel count as utilities for over-the-road trucks?
I think that would kind of get back to the auto expense category. I'd say it's probably pushing it, but might as well give it a shot, pending further guidance.
This is from Babette. If I received the funds on 4/20 and we have bi-weekly payroll, 4/24 payroll, owners were paid 10 grand each, 2 people, I get 83.33 for each owner forgiven in April 2020.
It's basically that in that scenario, 83.33 would be the amount that would be forgiven.
So then 2 payrolls in May, owners are paid 20K each. So can I get 83.33 for each owner forgiven in May 2020? Sounds like yes.
Yeah.
Same way in June 15, our final payroll in the 8-week period, so I can get 83.33 per owner forgiven in June. Total forgiven per owner would be 24,999 during the 8 weeks, but this is over 3 months, so it's not over the monthly average for a $100,000 employee. Sounds right.
Yeah. Oh, sorry, down to 5%. Gary, we got to rush.
Oh gosh. Find a cord.
Well, I haven't plugged in. You know what I can do is I guess I could do this on my iPhone. It's just not gonna look as it's not gonna look as good. So
That's all right. You shaved, you still look fine.
Yeah, meaning I don't know exactly I haven't done this before. So hold on a second.
We'll try. Doing that.
I'll be good with the iPhone, I think. Thank you, though.
Here's a question. I submitted an EIDL loan and received confirmation number on the website, but haven't received any email confirmations or any other communications. Is this how the process works?
Yeah, eventually you're going to get some loan documents. Okay, I'm trying to join, Gary.
All right, cool. I'm going to ask you another question while we're still hooked up to the iPad. Seasonal staff, our seasonal staff are not considered FTEs. This is from David. That still apply. Oh, hey, that works.
Okay, let me, okay, that should be eliminated. Woo, there we go.
Good job. Adapt and overcome, man. That is the theme of this season and hour. This is from David. Our seasonal staff are not considered FTEs. Does that make a difference?
Yeah, because I mean, the whole law contemplated seasonal employees. That's why you had the ability to use different periods.
All right, this is from Karen. We're in that gray area of information breakdown with BB&T and Truist. We applied the first day our link was available, 4/5, but we're still in the portal. Do you have any unique info concerning this bank in particular? Any tips on how we can get info? Have you heard any small businesses being funded there? Yeah, and we just heard today. But
I'll also say that was the bank that I was referencing earlier, or one of the banks I was referencing earlier that had a centralized process. So with BB&T, SunTrust, Truist, whichever route you went, they had centralized processing from my understanding. So there's not a whole lot that your relationship leader can do for you at this point in terms of status. Like literally, guy that I was talking to, was on the phone with us saying, well, look, I don't know anything more than what your portal is. So all that I can tell you is what he said, which is if you've got something from BB&T, Truist, SunTrust, whichever route you went, that your application has been received and properly submitted, and that date was before April 8th, you're probably going to be okay. If that's not the case, there's a good chance you're not going to be okay. And that I believe would have been an email confirmation from them. So if you flat out applied after April 8th or April 9th, it's going to be dicey. I wouldn't necessarily count on it, unfortunately.
This confirms what you just said from Vicky. We applied for PPP on April 5th from BB&T. We got funded yesterday. Banker helped a little, found out the status for us, and knew we would be funded. So this is from Brett. The error was not claiming one employee. I'm not sure what that means, Brett. Hit us with a little bit more detail. This is from Megan. Two-part question. Our 2019 annual salaries included quarterly bonuses, which led to some employees to earn over 100,000. One, does the 75% earning during the 8-week period compared to 2019 or just 2020 Q1?
It's February 15th through April 27th.
All right, the next question is the individual compensation for the 8-week period, or what determines the potential earning over 100K, or do we need to automatically adjust for those that did make over 100,000 in 2019? Hope that makes sense.
So we're not going to do any adjustments on our part for anybody that made over $100,000 because we're going to land in, cash flow is always a concern, but we're not going to ask anybody to take a reduction during the period and just accept the fact that some part is going to be not forgiven, but in totality, we'll still hit the forgiveness target because our payroll's pretty high. So in this particular case, 2019 is only relevant to the extent that was what calculated the amount that you were eligible to receive. And also probably how you reported your FTE count. For the purposes of the salary, it really only matters what you paid these people February 15th through April 27th, relative to what you're paying them now. And, if you think about, well, how's the bank minion going to verify your information? It's probably going to be to take, what you paid in the 56-day period, divided by 56 times 365. And if that's greater than 100 grand, subtract off an amount. So I just, I would assume that's going to be
some version of that calculation is probably what's going to happen. So you would want to make sure that that type of math works out in your calculations.
All right, here, thanks, Brett, for clarifying. So made an error in not claiming one employee on an EIDL application. Can I submit another application?
It's a good question that I don't know the answer to. There's no harm in giving it. It's like you're not going to go to jail for giving it a shot.
All right, from Robert, since funds of PPP will run out within a week for round 2, likely, it sounds like Republican senators are saying there will not be a third round. Are you hearing any differently for round 3 for the first 8 weeks of PPP, and what happens after the first 8 weeks?
I think a lot of it's going to be, I think in terms of the Republican senators, I appreciate that they're not, super happy with all the negotiation that has to happen back and forth. I'm not saying one thing or another about that politically, because remember, I'm a libertarian. So yet I am happy that the government's helping out. So there's probably some irony in that. And I can't go out of my house. That'd be a libertarian thing. So in terms of round 3 happening, I really think that's going to have to come back to is these shelter-in-place orders are starting to get lifted, things go downhill. I mean, I believe that shelter-in-place orders get lifted, things go downhill, we see a resurgence, and they have to put shelter in place again. That's a scenario where I'd see, I don't give a crap who you were that said no more funding. You're going to fund because it means that we're shut down still. So what I wouldn't necessarily see happening is, hey, ran out of money in this round, but we lifted the shelter in place. So in theory, we're business as usual. That case, probably not going to see round 3. Round 3, I think, would happen if shelter in place gets lifted and then things go bad.
All right, next question. My staff is currently unemployed and collecting unemployment and the federal amount. I was told that if the employees are allowed to work, then they will lose their medical plan if they cannot reach 30 hours per week. However, they can keep the policy if they do not work any hours, but I, the employer, am responsible for the entire premium, which is completely unfair because I thought the goal was to have them work. Anyway, my staff's hours are based on productivity and will not be able to accrue 30 hours per week if we receive the PPP loan. This means we will not be able to meet the 30-hour per week requirement to keep medical insurance policy. Should we document that the employees are working 30 hours if we receive PPP funds in order to keep the medical policy?
So we've had versions of that same question before. And my understanding is that the healthcare providers are still allowing you to provide health insurance for furloughed employees that aren't on your payroll. So then you start to get into mechanics of, well, how would I even make that happen? If you have a scenario where, like we have a BGW, we cover 100% of the individual, but then I wish that we could cover everybody's families, but health insurance has gotten so freaking expensive. It's hard to absorb all the cost. That's my health insurance soapbox. So if I furloughed somebody and they were on family coverage that they were having to pay for their family piece, I either need to accept the fact that I'm going to have to pay that, or I'm going to have to pay them on payroll for that amount, but not give it to them. That's the only way that you can make that work for them to keep family coverage if you weren't covering the full amount. And then at some point, you just got to make the decision on, was that something that I'm just going to permanently give to the employee, or otherwise am I going to try to get it back from them, somehow? So the only way you can do it mechanically is, either you just got to suck it up and pay the full amount, or alternatively, you got to pay them at least that amount through payroll and then just not give it to them.
A comment came in from Melissa on that. For a prior question, change your 30-hour per week policy. So here's the question. How would you define the transportation costs as being called out by the part on the additional costs that PPP loans can cover and be forgivable? And then the second part on that is any guidance on leases for fleet. Do you think these costs will be covered under additional costs and covered under forgiveness clause?
I think we've hit that one. Again, all the stuff about vehicles was in the self-employment piece. So I think it's going to be a little bit dicey on the business side.
Have you heard any?
Sorry, with the exception that leased equipment would be a rental, so that probably would qualify, given everything around real or personal property. But there may be guidance that's the area where I'm a little bit I'm just a little bit cautious on, is the whole 25% piece. I mean, I know what it said, and at the same time, it seemed like it was really geared towards paying my rent and my utilities. So I would be cautious on that and try to get there through other means.
Have you heard from any companies with hourly employees being offered hazard pay as bonus during the PPP loan covered period? And if so, is there a general range of the amount being offered as a bonus?
I have not heard anything about hazard pay as a benefit. The only thing that we've talked to clients about is paying people more in order to maximize the forgiveness amount, or otherwise entice people to come back on payroll.
This is from Benjamin. If you get 100,000 for an entity and 75,000 is used for payroll, can you divide the money up amongst the employees we want? Oh, I think we addressed.
Yeah.
Okay. Yeah, we've already addressed that. That came through chat. We normally accrue annual bonuses at the end of June and pay in August. Can we pay the annual bonus in June? And will this be a problem for PPP forgiveness?
Again, it goes back to cash versus accrual accounting. If you need it to get there, I would plan on, pending further guidance, paying it. And then the only thing you're going to have to be cautious of is just, knowing that if that caused the calculation for annualization to be over 100 grand, you're going to potentially face an issue of the amount in excess of 100 grand. That's why if I was going to do that and I needed to use that as a strategy, I would probably break it up into little increments. So if, for example, I paid a $100,000 bonus in August and I was going to bring that back in June, the only relevant component of that is going to be the amount that doesn't put that person over 100 grand on an annualized basis.
Next two questions actually from Judy and Jennifer regarding Bank of America. So first one is, B of A confirmed that our application was complete on April 20th, says they will send our loan request to the SBA as soon as they begin accepting new applications. With your experience, what does this mean for my business? B of A mentioned via phone call that because we didn't have an existing SBA loan ID, there was a delay while that was being generated. I know this is hard to answer, but what are the chances we will even get funded? Great question.
If you're through, I feel like if you're through underwriting and someone has said you're in the queue, that's a good sign. And the only thing that I've heard contrary to that was from SunTrust, BB&T, Truist, in which case I don't think they necessarily told anybody whether they were through underwriting or not. They just said, hey, we're probably only going to be able to get through applications. I don't know what that means, but through applications that were through the 8th or the 9th of April. I think everybody else, there's still a decent enough chance that if you got through underwriting, they say you're getting submitted to the SBA, you got a number, you're probably, in good shape.
So Jennifer also had a question on B of A. They submitted their stuff on 4/3, haven't heard back anything. Do you recommend us resubmitting with a smaller bank? I would say it doesn't hurt. And if you want to have me connect you with somebody, send me an email, gfrey@trustbgw.com. But you probably need to move on that today, and I'll be happy to help you. Joe, under transportation description of PPP, would car allowances, gas and oil, FedEx, UPS, etc., work for an S corp?
FedEx, I mean, that's really probably more of a shipping expense, so you're probably pushing it on that one. But the rest of the stuff that you described, I think would be included, again, with the same caveat that all the auto stuff was all associated with the self-employed guidance. It was not in the business guidance. So I just would be leery of it being included in a final inclusion and try to find another way to get to your 25%.
Question was, how did PPP money flow to banks? By certain allowed amounts or first come, first served?
I don't definitively know the answer to that question, but my assumption is it was first come, first served, just based on how it actually happened. Because community banks that had no business getting the loan volume that they did, and banks that should have gotten a lot more didn't. So that's why I believe it's first come, first serve.
As well. Just to confirm, the owner of our company owns the headquarter building in a separate LLC, and the company pays rent to the separate LLC. Can this rent be prepaid during the loan covered period?
Again, still the same cash versus accrual argument. There's nothing that says that you can't prepay it, because the only prepayment section was associated with the interest payments. So there's nothing that says that you can't. I just, again, would be cautious that, there may be a chance that, people are like someone would have to go the nth degree to say, let me count the number of payments that occurred and align that back to 2 months. Well, again, you're in a middle weird spot. So, I paid my April rent, but technically I have, 30 days. If I pay my April rent on April 1st, but I received funding on April 10th, I technically had 20 days of rental expense that could have been included. And then when I pay my June rent, I've got the same 10 days. So you really got to think it's got to be cash-based accounting. All that said, if you prepay like 8 months, I think that's probably going to be a dicey area for you.
Okay. This is clarification on a question earlier from Toinette. Regards to my incomplete question about the 600 federal that we're receiving for unemployment. If we get PPP funds, I assume employees would need to document on PPP funds as income, which would stop the federal on the weekly certification. After 56 weeks of PPP, it's not 56 weeks, it's 56 days. Right?
Yeah.
Would reduce wages again and assume the employees are going to refile for unemployment. Is that allowed?
Yeah. What you're describing is possible. And going back to what we've discussed earlier, the challenge that you may have is if you didn't have them up to what they're receiving on unemployment, I guess good luck getting them back unless you figure out another way to incent them to come back. I know that's theoretically not correct in terms of the unemployment laws, but good luck on getting that fixed in the 8-week window.
This is from Mina. In calculating wages for employees who make over 100,000, do we use calculation of 100,000 divided by 12, then multiply by 2 and get 16,667 for your 8-week period, or do we use 100,000 divided by 52? Then multiply by 8 and get 15,834 as your amount?
It's a good question. I'd have to think about that one a little bit more, Mina. I've been operating under 8333.
And just as a point of clarification,
I
Rob,
mean, technically it probably would be, 56 days and you calculate it at a daily rate versus the entirety of the year.
just as a point of clarification, Robert said, explain the 83%/33% forgiven you keep referring to, and it's not percentage, it's 83.30, $8,333 is the amount that Adam's talking about to get to $100,000 cap on PPP, correct, Adam?
Yeah, that's what $100,000 is divided by 12 is 8333. So it's simple to use that as an example. We don't actually have final guidance on an official calculation. So it goes back to, other than, putting some people on payroll if you needed to try to get to the forgiveness amount or bringing people up to get to the maximum forgiveness amount, I really wouldn't worry too much about the calculation until exactly how it's going to be calculated until probably second week in May.
This is still around that same sort of question from Denise. How do you account for over $100,000 salary, cash basis or annualized and capped?
Again, if you think about what's going to have to be proven, it's going to be, all right, what's, at the lowest level, it would be, what did you pay them in the period extrapolated out over the entirety of the year, relative to what you had also paid them prior to. So what that leads me to believe is that, hey, if you had somebody that had already earned $100,000 for the year, by the time you receive PPP funding, let's just assume they're probably not going to get included in the calculation. If you had somebody that was on pace to earn $100,000 or more, then if you reduce them down to $100,000 in this period, probably you could get the full forgiveness amount, and then you just make it up on the backside. And if you didn't do any reduction at all, it's just going to be the amount in excess that on an annualized basis. So let's just do some simple math. Let's say somebody makes, $108,000. I'll probably screw this up. $108,000 on an annualized basis. So if this was a full year, I'd have $8 grand that was backed out, and I've got an 8-week period that occurred, so 56 days, but I'm going to call it 8 weeks to keep it simple. I'm terrible at math, so that would mean that $8,000 divided by 52 times 8 probably would be the amount that would be backed out from a forgiveness standpoint, which I don't think would be that much money.
Yeah, so Vicky says our HR department says you can't use the 8333 number. You have to use a weekly rate times 8, which is less than 8333. I hope future guidance points to 8333.
Well, again, I've just used that as an illustrative example. And what I'd also point out to your HR department is I was unaware that the Treasury had issued further guidance beyond what we've been saying. So there is no calculation at this point. We've been using 8333 just as an illustrative example of somebody making 100 grand. We don't actually know what the final number is going to be. And we're probably not going to know the final calculation until later on in early to mid-May. So I think anybody that's coming out right now saying this is the way you have to do it is full of crap, because nobody really knows. We're all taking best guesses, educated guesses.
Yeah, the Treasury Department seems to be the best of the governmental entities that's updating information, and it's still very incomplete.
Well, it's the only authoritative source is the Treasury's. The only authoritative source is the Treasury right now, and they have not said this is how you calculate payroll costs during the 8-week period for someone making over $100,000.
Next question from John. If I have 4 payrolls during my 8-week period and I have 50% of my employees back for the first 3 payrolls and 100% back on the 4th payroll, does that qualify for 100% forgiveness?
You should.
Chip, will I be able to get forgiveness on my lease payments for grading equipment under the 25%? These are true 3-year leases.
Yeah, under the 2 components, one would be rent, and the other component would be the implied interest expense associated with the lease. That's where you'd be looking at in this particular case, pending further guidance that says that you can't do it.
This is from Robert. If we have a business where we split rental incomes between the owner and us, the manager, could the split we give the owner be characterized as a mortgage?
Well, I'd have to know more about this particular circumstance, but if it's owner-occupied real estate, meaning like, in some format we own the building and it happens to be, I own it as the owner and then a group of key employees owns another piece of it as the owner, the forgiveness portion is the rent itself, that you paid, not the mortgage interest that's sitting over here in the entity that actually owns the building. So rent, I'm interpreting this as rent is rent. So if it's rent, it's forgiven. If instead it's interest, it's forgiven.
All right, this is from John. My documents are dated April 18. The loan documents are using this date for repayment, etc. I signed my documents on the 20th. My funds were deposited on the 21st. Which date do I use to start the 56-day forgiveness period?
It's the regardless of whatever your bank says, because there's been some conflicting information from banks, the way the Treasury Department has said, it's the date that the funds hit your account.
All right. This is Mary Ann. I was going to send it to you privately, but I think everybody probably wants to know this too. I just contacted Pinnacle this morning and was advised as of Monday, 4/20, they're no longer accepting new applications at the Fairview Road location. So I do know as of this morning, United Community Bank you're going to have to get your stuff in today. Ping me and I'll connect you to Thomas McTeer. He will help shepherd that through for you. Aquesta said that they probably are on a limited basis. I could help you there too, but just send me an email, gfrey@trustbgw.com, and I'll help you. The next question is it okay to run an extra payroll at the end, although it's not the date I usually have my payroll on?
That, again, pending further guidance, cash basis accounting is going to trump the day.
All right. Please repeat how you stated book it as a loan and create a counter expense account. Repeat that example so that you're crediting income and debiting the loan.
So here's exactly what I would do to keep it super, super simple for yourselves and also your tax preparer if we are not the tax preparer. Because I would hope that we wouldn't screw this up, but there's always a possibility. So I get the funds in, I deposit, $500,000. I've got to have a corresponding entry on the other side. That corresponding entry is going to be called Paycheck Protection Program Loan. All right. I've got to run my first payroll. It's $50,000. Cash comes out of the bank account. That's a credit. I'm going to debit salary expense because I've got to show the expense. That's how I'm getting forgiveness. I have to show the expense because I want to get the tax deduction for it. So the payroll is now paid, but the loan is still out there in full. because that second transaction of paying the payroll, we never touched the loan account. So to touch the loan account, I would then do a journal entry for something like other income, PPP, forgiven loan, credit $50,000, which is, an income event for revenue recognition purposes. And then I would debit the loan amount on your balance sheet, which reduces the loan amount by 50 grand. So eventually, as you've exhausted the funds on qualified expenses, what you should end up with is a zero loan on your balance sheet, and then a $500,000 other income item, and then $500,000 in payroll expense. So that when you go to do your taxes, that there'll just be probably an M1 adjustment on the income statement that says book income not reported on the tax return, $500,000 explanation, paycheck protection money, loan forgiveness, and then everything is square. And the only time that would get a little bit squirrely is if in your payroll you had people that were getting paid more than 100 grand on the annualized basis. Your journal entry would be only for the amount on that payroll that would have been forgiven. And again, I don't even know if I would mess with this until, I would go ahead and book those entries now, but I don't know if I'd mess with the journal entries to reduce the loan amount until right as I was ready to apply for loan forgiveness.
Next question from Miriam. My loan application is under review. Should I submit again?
Again, it goes back to underwriting is the first golden ticket. So if you made it through underwriting and they're not asking for additional documentation, that's usually a pretty good sign at this point.
Yeah, if you're going to submit somebody to somebody else, you probably need to do it today. From Judy, want to make sure I'm not oversimplifying all of this. In our calculations for our business, assuming we stay status quo with our employees, we will easily hit the 75% mark to maximize forgiveness, and our other expenses will easily consume the 25% balance. Is there more I should be concerned about? With our average payroll expense at approximately $70K per 2 weeks, and we receive roughly $300,000 in our PPP loan, we will have no issues hitting the 225 minimum.
Yeah, the only issue that you'd have would be, and I mean, we're in the same boat. So the only thing you'd have to figure out would be, hey, is there any excessive salary that's included in that number? And if the answer is, yeah, but it still isn't going to impact it, you're fine. If the answer is, yeah, it's really going to impact it, that would be a problem.
All right. Well, you have done a great job. Again, Adam, you've answered well over 70 questions, and it's taken us 1 hour and 43 minutes to do this one on all this detail. Thank you for doing that. I don't see any other questions.
Still have my voice.
What's that?
I still have my voice.
Yeah. And you have adapted and overcome and switched, platforms even. So this is good stuff. We plan on being back again next week, Tuesday, because I don't see these questions necessarily drying up overnight. We got a couple more that are just coming in. Hey, Shannon, thanks. We appreciate you too. Tell Nathan, hey. And I have a friend that has a company running 24 hours a day and is up 25%. They're getting PPP. I guess this is still okay.
Well, remember that getting the funds in the first place was subject to you self-certifying that you believe that you would be harmed by the pandemic. And when you apply for forgiveness, you're supposed to certify that you were harmed by the pandemic. And again, it's one of those ethical questions, in terms of what are you going to do? And I think the challenge with that specific ethical question is the unknown associated with the future. So if you take, like a good example that we have within our own client base right now are construction companies that are doing that are in the home, that are associated with the home building industry. Well, yeah, their crews are running like crazy. Weather's good. You know, and those, you know, companies like Lennar and Pulte and companies like that, they already have homes under contract that they need to get pads down and construction happening. But what are they not doing? They're not building spec inventory. So in this particular case, there's a good chance that this company would be up 25% in the test period, but otherwise may be harmed in the third and the fourth quarter. So I don't really know how you can't not certify that. Yeah, you're basically just taking your best shot. Do I believe that I was harmed as part of the pandemic? And it's very likely that the harm, or in a lot of circumstances, that the harm won't actually occur until the third or the fourth quarter or next year, you know?
Right on. Final thing from another Adam, not you, but another Adam. He's saying, thanks. Just received notice that my PPP fund was funded during this call. So that is a great way to end this call. We celebrate with you. I'll tip whatever's left of my elderberry juice, and Adam has some water there, and I'm sure some hot drop and roll later on in the day. Thank you guys so much for joining us, and we'll keep you posted. We plan on being back on the same bat channel next week.
And just a reminder, John and Bob, I swear I'm going to buy some 704 now that you got it in the can.
Oh.
Yeah.
You guys have a great day. Thank you so much. See you around.
All right. Thanks, Gary.
Uh-huh.